Welcome to Trading Lounge and the US indices for Friday, October the 8th, and starting with the Russell here. I've done a little bit of work on this, as you know, from yesterday, so we're looking at a triangle pattern, and I don't think it's quite completed yet. I understand that we could have an impulse wave from, if I just copy that for a moment and put that there, I'm going to dull that out though, but there is the case that this could be counted as wave one up here with a correction, and then another impulse wave and a correction, and continue to go. Now I would be on that side if the 2,300, the top of minor group 1, became the support, but otherwise I'd rather observe it for a little bit longer and look at this move down. So if we look at this on the tick chart, where we can see a fair bit more detail. So wave 3 over here, an A wave, a B wave, an A, B, C for the C wave, an A and a B and a C for the D wave here. And then an A wave, an A, B, C for the B wave here. We're looking for a move up yesterday, and then we're still looking for this move down here at this point. So like I said, I just want to allow this to play out, and if we get a classic trading levels pattern on the 2,300, well then we know that we're in bullish mode at that point. But otherwise I just think we should just keep our hat on a little bit further and just allow this to play out and complete. If we get 5 waves down here, then we can look at the first impulse wave, and hopefully we could build in from the 2-2 at that point. Okay, moving over to the NASDAQ, and I understand that it's that it looks bullish at the moment, and we could actually put that wave Y there and wave 4 in play over here. But the reason I'm not doing that just yet is because we haven't really pulled back to our targets where we should be pulling back to on the S&P and the NASDAQ just yet. So I'm still looking for after this move here is finished, we're still looking for a move to the downside at that point. That would make a double zigzag at that point. But I understand we can get an A and a B and a C wave in here, and we'll look at that. But as I've mentioned a few times, that we wouldn't turn long unless we had the 15,000 as the as the support. I don't mean going long, I mean that calling the low in here at that point. Obviously day traders will trade up to that point, but that is the line in the sand at this particular point in time. So let's just cruise in here and have a look at this on the intraday. So I've moved away from any triangle pattern that I've had because of that move to the upside. But yeah, so starting from the top here, we've got an A and a B and a C for the W, and A and a B and a C for the X. And this move down through here where the A wave is, we can count that down as 1, 2, 3, 4, and 5 there for the A wave, the B wave and the C wave for the A wave, and then an A and a B and a C for the B wave here. So for the X wave here, we're looking for an A wave, a B wave, and a C wave in here. I know that you can also count this as WYX in here as well, and it's probably the right thing to do, but I'm just more of an ABC man myself, but at the end of the day it's pretty much the same to a point. Yeah, so we need to, so I'm thinking that we've got another little push to the upside here. It does appear that we could have 5 waves here, but on the intraday it looks like we've got a little bit more to go. Yeah, so the A wave, the B wave, the C wave. So, even though it's sold off from the 15,000, that's just normal, isn't it, once you understand the trading levels. And we will just wait to see if that finds support, and then we're looking for another push to the upside. So once we've got that first high above the level there, then we can use that as a catalyst, a part of a long trade setup at that point. But this once we have 5 waves up here, we would have a correction after that. We'd want it to be a reasonable size as well, and then we can look to, we've talked about this before, about going long at that point, but we need all that to unfold. But one needs to be careful, because we could be moving lower at that point there. So if I go to the tick chart here just for a moment, it will just show you that we've got more upside here, and we'll need to drag in a bit more data, a bit more than that. Okay, so this B wave to the C wave here, I was looking at it like this, so kind of 2 more little humps really. So first of all, we've got this wave 1 and 2 here, and then I'm looking for that for 3, 4, and 5. So I still see that we need to have this particular pattern to go as yet. I might have counted something wrong in here, and we just have one more top here. But I think one of the important things here is that also when we're working with a level, in this case a medium level at 15,000, we have group 1 above and group 2 below. So one of the things that I use, if I can't figure out what's what within here, you have to understand that group 1 above and group 2 below, that's just the natural swing range for anything to occur in here. And it's always better to make a move later rather than earlier, because you can get trapped. If the 15.3 becomes, in the bigger picture, if the 15.300 here becomes the support, then you know that the market's bullish at that point. Okay, so you'll need to see not a big thing, it's just really something like this here, just the same sort of pattern here. If that top gets taken out, or the second one, then you know that we're in a bullish trend at that point. So that's getting support on top of group 1. Also the same thing with group 2 down here. I know it's a long way from the 15, but it's kind of helpful in the beginning to understand things. That if this becomes the resistance, I normally use the 72, but the 65 is a bit safer. So that's the 14,650. If that becomes the retested resistance, then you know that the market is leaving this number to the downside. So it's kind of helpful. It gives you a bit of a shell to work to, and then from that point you can refine what you're doing at that stage, and that means, counting the intraday up here, and like if we get a top in here and we get an A and a B and a C wave down here, for instance, and then you see the market move up from that point. Well, if you can count that as a 3-wave move and 5 waves in this move here, then you will know that if it's going to be bullish corrective, it won't break that A, B, C pattern here. So any short under that would also be fine. Okay, anyway, just getting back to this a little bit, I think I've done a reasonable job in here. You can just copy that and double check it and so on. But wave 5, 3, 4 and 5, so a little bit more upside there on that. If this just continues to the downside, breaks down lower, down through here, breaks into the 14, 18 here, then you know that there's something wrong at that point. I mean, even if I take this low here, where would that leave me? That would also leave me the 38.2% retracement level at that point. So even if I copied that and put wave 3 here, then the 38.2% is at the 14,800. So we wouldn't want to see the 14,800 become the retested resistance. Then you would also know that it's probably bearish at that point. That's why a lot of the time I use the 72 here to build my short trades in, and then look to add under the 65, and then there'll be a bounce on the 500 here, wait for that to become the resistance, and then look to add on to that as well. It gives you a little bit of a framework, the trading levels, to move in long and short, and once you understand the behavior of the behavior of a market at certain price points, it becomes a little bit easier still. Okay, over to the S&P. much the same as well here. So let's just go to the 4-hour chart. We haven't reached our targets to the downside. That's what sort of bothers me a little bit. I know on the physical market, on the SPX, we've got this as the low here from the futures, but on the SPX, this was the low down here. So in that case, when I think about it, I think, well, you know, we could have a low in place, Pete. We could put the wave B here and then this wave C here based on the cash market. And then you've got your 3 waves to the downside for wave Y of 4. Yeah, I understand that. And that could even be correct. But we still haven't pulled down to the levels that I wanted to pull down to, closer to the 100 area here. So yeah, it's a bit of a rock and a hard place, really. But also, too, I don't have, on the physical market, too, on the futures market, the interesting thing is that this move up through here counts as corrective, but on the cash market, the SPX, it counts okay as 5 waves to the upside here. So, yeah, bit, you know. So anyway, I'll put that back up there for the time being. So just want to give it a bit more, you know, a bit more go up here for this. And I can also see stock want to move down as well. So this is where I am at the moment with this particular count. And just going into the hourly chart here, it does look from this point here, if I look at this as the A wave here, then an A and a B and a C wave, it counts quite nicely for that, for the B wave. And here it counts 1, 2. It's not too bad, 1, 2, 3. Yeah, I think there's still another little move to the upside here as well. We'll have a bit of a look at that in a moment. So yeah, I understand you can count this differently through here. You know, because we're working in WXYs, you could continue that case. But still, it works okay here because it looks like a B wave here. But on the cash market, that looks like wave 1 to the upside here. So I understand the bullish side of things to a point. The tick chart, let's just go in and have a look. I haven't really labelled this, but should just check that on the cash to see. I'll have a closer look in a moment. Yeah, I think it's that one, because that would give us 1, 2, 3, 4, 5 for that one, which would need that one there for that. We'll double check that in a moment. That still gives us a top here of this one. This one. So there could be 2 more little highs coming into play. This would be the same count as the NASDAQ. Could drop further, that thing that's down here at that, where that wave 3 and 4 is. That's a bit lower. So in that space, just profit taking at the end of the session. Now it does look like an impulse wave to the downside, doesn't it? If we take that as the top, take that as a top there. Can we go 1, 2, 3, 4, 5 for 1 and 2, 1 and 2, 1, 2, all of the third, fourth? I don't know. Anyway, I won't burn your time on that, but there could be, for this, there could be something like this here for that before heading higher, or otherwise we've got that in play there already on that 4-4. But the point here also is that, well, the main point here, I guess, is that we can have two highs here. We can have this one, and then a correction, and then another one before rolling over. So two more highs, and then we can look to go long above that. I mean, I'm in Australia, so it's hard to give updates. You know, I'm not going to get up at midnight. You know, I'm an early person. I get up between 3 and 4 in the morning and do a bit of meditation and do my things. So let's just see how this finishes off, okay? I'd be careful about going long unless you're an intraday trader and you got a grip on it. You know, I don't think position traders should be in at the top, because even so, this move up through here, right, we should see, you know, even if it's bullish, we should see some sort of, you know, retracement in a reasonable way, you know. So from the low, let's just take it there, but you can find the top there. So we should be coming back down into this space here, even as a bullish move, you know, which would give us time at that point to go long at the top here and also here as well. Anyway, food for thought with all of that. So my thing is just to allowing it to top out, let it pull back, and then take the tops out if that's going to be bullish at that point. But otherwise, we're going to see these, you know, work itself lower, and that's what we need to be mindful about. Okay, I'll leave it at that. Thanks for tuning in. Cheers.